Hey everybody, welcome back to the channel. So if you're new here, this is just a channel where I go through my TFSA that I started earlier in the year, and I'm trying to build a $500 portfolio to a $10,000 portfolio. So if you'd like to follow along with the journey, just subscribe to the channel and leave a comment and leave a like. So we have just crossed over $9,000, so we're at $9,357.34.
Vegeta, what does the scouter say about his power level? It's over 9,000! What, 9,000?
The market has rallied back in the previous, yesterday. After being red for quite a few days, people are optimistic about the market again. We're up on the week, we're up on the month, the last 3 months, and all time we're up 887.55. And so the changes since my last update, I've purchased another share of Apple. This is just a great company. I keep talking about how great it is, but I'm not going to do it in this video. You can watch my other videos. I think I talk about it enough. Big purchase was adding another share of Alibaba. This actually went down to, I got another share at $112. And the main thing that happened was that China said that they would delist Didi. If you're not familiar with that company, they're basically like a ride-hailing service. So basically, think of it like Uber. And when that news hit, all the Chinese stocks went down together. So I wasn't really nervous about Alibaba. Nothing changed about Alibaba specifically. So I added another share because I thought like that price is just great, and the reason why the stock price fell down was, it had nothing to do with the business or the fundamentals of the company itself. So I decided to add another share here just to increase my position in Alibaba. And the reasons why I'm not afraid of Alibaba being delisted are just because I believe that the Didi listed their stock without the Chinese government's permission. So that's going to be one thing. And they have sensitive data. So because they didn't listen to the Chinese government has been targeting Didi ever since for disobeying them, for listing on the New York Stock Exchange, and as well as not having secure data because they don't want to share the whereabouts of their citizens and their movements, probably for national security reasons. That makes sense to me. And we also picked up another share of Scotiabank, so we went a little over 8 shares. They announced their dividend increase was like 11%, so pretty good there. We also picked up a little bit of TD Bank, so a little bit more of this fractionally. They announced a 13% dividend increase, so that's another great one that's going to increase our income. And the newest addition to our portfolio is Tesla. So I've started a position in Tesla. I'll be going over why. And I buy all these stocks on Wealthsimple Trade. It has no commissions on Canadian listed stocks and ETFs, and it also offers fractional shares on certain stocks. So feel free to join my link in the description and get the value of a free stock. Here's why I started a position in Tesla. So main thing, they're cash flow positive. So because that's a rule that I have personally, is just I need a company to produce, money. It needs to produce value for me. So if a business doesn't make money, I don't understand how that business is going to give me a return. So they made $2.5 billion in free cash flow in the last 12 months, and they are projected to make about $10.5 billion in 2022 and $17.86 billion in 2023. So while the stock price does look quite expensive, the valuation seems high, the growth rate is definitely there. The Tesla's gross margins as well. So Tesla has a 30.5% gross margin on all their vehicles. So this is a higher margin than Porsche or Ferrari, and they're increasing it over time due to being able to manufacture their own parts. So one thing is that, if Tesla isn't happy with the quality of a certain part, they're just going to say, okay, we're just going to do it ourselves. We're going to do it better, and we're going to do it cheaper. One example that would be when NVIDIA produced like a full self-driving chip for them, and Tesla basically went, this is a piece of garbage. They basically made their own that was cheaper, used far less chips, and was essentially, 10 times better than what NVIDIA made. So yeah, Tesla just doesn't settle. They always try to make the best product possible. And because they make their own components, like their own batteries, which outperform every other automaker or any other battery manufacturer by a wide margin, that is going to keep, they not only have a lead, they're more profitable, and that's just going to increase over time. And just to compare the margin to Mercedes-Benz, they only have 23%. That's another luxury brand. Toyota only has 21%. Hyundai has 19%. So higher profit margins than their competitors, which is, a very good sign going forward. And just comparing the debt of the automotive industry as a whole, Tesla has a lot less debt. Like you can see over on the very far right, 11.7 billion in debt. The ones that I'm really, really stand out to me are the debt of Volkswagen and Toyota. You have to think, how is Volkswagen gonna pay back a debt of $260 billion? Like how? They don't even make that much money. There's a lot of years where they actually lose money. They're very inefficient in their business, and they have tons of debt to pay. So that's not a good sign going forward. And they also make, internal combustion engine vehicles. So that also isn't going to be a factor going forward, that all these car companies have, these dealership networks that, aren't efficient. They have issues with, converting their car making plants to EV electric vehicles. They're way behind Tesla on that front. So yeah, because this ICE vehicles are not going to be allowed, anymore. So any internal combustion engine vehicles. So in Europe, many countries are already making it, illegal to sell them by 2025 or 2030. So that's, increasing the demand for electric vehicles in a very short time frame. And because all the other car companies have lower profit margins, massive debt to pay back, and if interest rates rise, it's going to become even worse because they're going to have to increase their payments. And on top of having inferior products and being far behind technologically, they won't be able to compete on pricing either because Tesla has higher margin. They can play around with the pricing and control pricing a lot better. And also, China is expected to do what Japan did in the 70s and 80s and bring out cheaper and better cars than the legacy automotive manufacturers, and it'll be devastating and quick. So China is also becoming really competitive in the EV space, not to the point that Tesla is, but they're definitely doing a lot better than, Ford, GM, Toyota, because they've, kind of been stagnant. They haven't been pushing, electric vehicle technology forward. China's at least, trying their best, and, they're making some pretty decent vehicles out there. They're not quite as good as Tesla, but just because of how lazy and how backwards thinking, the automotive industry is as a whole, it's going to be devastating, and it's going to be a very, very quick process, and they're not going to know what happened to them. So this happened, when American automakers got decimated by Japan in the 70s and 80s by better, more efficient vehicles that were cheaper, and they just took over. Another thing is Tesla spends a lot more money on research and development than any other car company. So basically, for every car sold, they're spending 3 times more on research and development, which means they can spend more money on, improving their cars. They're not trying to, make a slightly better car. They're trying to make the best car possible at all times. They're not incrementally trying to make their car slightly better than last year's model, not do too much to change the model. And they spend no money on advertising practically. Whereas all the other automotive manufacturers, you see their commercials constantly. Tesla spreads by word of mouth. Tesla spreads by, Elon Musk having a very popular Twitter account. Tesla doesn't need to spend money on advertising. And because of that, they can reinvest that back into their business, making the best product possible. So that's a huge advantage for them. So just to sum that up, Tesla has very little debt. It has higher margins than the rest of the auto industry. They spend 3 times more on R&D than any other automaker, so they'll always have a superior product. And they already have a giant head start on every other company. And they don't spend anything on advertising. So they have a lot more money to innovate and invest back into the business. and not be bogged down by debt or advertisements. And the massive growth potential that they do have. So the board chair said by 2030, Tesla's aiming to sell 20 million electric vehicles per year. So Tesla's projected to sell about 900,000 vehicles this year for 2021. So essentially, their goal is to sell 20 times their current sales. And the thing is, with their increasing margins, it should provide a great increase over its current market cap of, around, over $1 trillion. So I even did an estimate. So even if they only manage to do about 5 or 10 million vehicles, the share price should grow between 2 to 5x or more. So I'm not factoring in the energy business, the insurance business, the Tesla robot, the self-driving taxi service. I basically assume they won't happen just because the future's unknown. I can't guess what's going to happen in these industries. Some of them will be successful, some of them will fail. So I'm not going to bake that into my evaluation of it. So because of that, I expect in the worst case to match the S&P 500 at current pricing. And in the best case, I expect a 5 or 10x or more my investment by 2030, which is a great return. So that's why I'm invested in Tesla. Have a great day, everyone.